हेलो एवरीवन, वेरी गुड आफ्टरनून टू ऑल ऑफ यू। सभी को आवाज़ क्लियर आ रही है? एक बार कंफर्म कर दो कमेंट सेक्शन में। So guys, just confirm it once in the comment box if you are able to hear me or not. Audio visuals are clear. Just write yes no in the comment box so that we can start the session. So guys, in today's session we are going to start our insurance awareness section for LIC AAO exam. Right? Now before starting, let me tell you what all the topics we are going to cover in this entire video series. Alright? So first of all, let me show you our entire lecture plan, then we'll move towards the session. So these are the topics which we are going to cover in the entire insurance awareness. So first class is for your introduction to insurance. That means this is the today live class. Then the second lecture would be of core elements of insurance. Then the third is principle of insurance. Fourth is feature of insurance contract. Then we'll talk about underwriting and rating. Claim processing, very important topic. Documentation, customer service, grievance redressal mechanism. So these are the basic, you can say, your introductory part, or you can say the basic or the fundamentals of insurance. Then we'll be diving towards, now this is also a very important topic, principles of insurance. Then after that we'll be diving into different types of insurance, that is your life insurance, health insurance and general insurance. Apart from these, I'll be taking one session on your insurance related schemes and one session on the IRDAI and its function. So all these topics, so how many? 12 here and 2, around 14-15 lectures would be based on your insurance awareness. So this is your entire lecture plan. Is it clear guys? Yes, no in the comment box. Now what we are going to study today, let's check that out also. So today's agenda is your introduction to insurance awareness. So first lecture we are going to cover, and in today's session will be touching all these topics. What is the need for insurance? We'll be talking about the history and the evolution of the insurance sector. We'll be talking about what insurance is, right? What insurance is all about, how to reduce risk, principle of risk pooling, very important part. Please remember the questions will come from these particular topics. Risk management techniques, who are the market players in insurance, now the role of insurance in the society, and what all the social security schemes are there for the insurance sector. And after that we'll be solving some of the MCQs. Okay, so this is all what we are going to study. I hope it is clear. I'm not getting any messages in the comment box. Guys, my voice and videos are clear. Just confirm it once in the comment box. Chalo. Yeah, thank you so much. Now, before starting, let me tell you one story. Before starting the insurance, what insurance is, what is the requirement of insurance. But before starting, let me tell you one story. Let's say there is a person called Rahul. Rahul and his 4 friends, they are traveling. Okay, here's Rahul and his 4 friends. They are traveling in a car, right? A brand new car Rahul has purchased and they are traveling in that. Suddenly, one of them, he started playing something, and suddenly the car met with an accident. Okay, his car is badly damaged. The entire car got damaged, and the repair cost of this car comes to, let's say, 5 lakh rupees. Now Rahul, who is the owner of the car, he's very shocked. Yeah, I've just bought a brand new car. Now it is all gone. My father is going to beat me. So he's very tensed and very shocked. Hi, Chitranjan. So the other 4 friends, they sit together and they said that, what if any one of us faces such a loss in the future? Right? Rahul was worried that how I'm going to pay 4 or 5 lakh rupees. Right? So the friend, all the 4 friends decided that instead of Rahul suffering alone, let us all contribute money, 50,000, 60,000 each. Let's contribute and pay him. Okay, and he will get his car repaired. Right? So Rahul was happy. His friend were also happy that Rahul is now relaxed and not tensed. Okay, so that year he got the help from his friend. How? All the 4 friends, they contributed in a common pool of money. Okay, they created a pool of money, right? A small amount everyone contributed. No one bear the full burden alone. Everyone took the part. Okay, now let me ask you one question. Would you feel more secure if such a fund existed for you? Let's say, for example, let's say you are a army person. You are posted in, let's say, border area, and you know that in border area, life is on the risk every single minute. And let's say this army personal has a life insurance cover of, let's say, 2 crore rupees. Will he feel relaxed or not? That yes, even if I die, I will leave 2 crore for my family. Okay. And what if that fund was managed with full trust and legal backing? So this will give confidence. Yes or no? Definitely. Okay. And that exactly what insurance is. A system where a loss of few is shared by many. In case of Rahul, the problem or the loss was of Rahul, but he was supported by all his 4 friends. That is insurance. Okay, now you got the idea what insurance is. Now understand why insurance is required. Just like the Rahul Singh, है ना? We see that in everyday newspaper, we have seen that there is train accident, a lot of flood is happening right now. The monsoon season is there. In Jammu, the bridges have collapsed, landslide have happened, many people lost their life and property. So life is very uncertain. We don't know what is going to happen tomorrow, right? So whenever you are uncertain, whenever you don't know anything, what will happen? You get a sense of fear. When you don't know about anything, na, what is going to happen, you will always be in fear, right? And along with that, there is financial loss. Thank you, Shashwat. Okay. So uncertainty in life. And the second thing is human response. See, human beings they live in a society. They live together. Okay. That's why we live in a colony, society. Why? We human beings have a nature to create a community. They always want to live together and share their problems and grievances. They have the tendency of helping each other, and it is by nature. So people tend, for let's say there is a Ganesh Puja, We collect money and we put a Ganesh idol and we celebrate. This is what? Pooling our money for a particular purpose, right? So this collective support has resulted into the formation of a concept known as insurance, right? So because of these two things, uncertainty in life and human response to that, this has led to the creation of insurance. Remember, whenever people fear, they tend to come together. Why? Because they know that alone I won't be able to face that, but together we can face any problem. Okay, that is how the insurance concept developed. Now let's talk about, is insurance a new concept? No. 3000 BC, Babylon, the Babylon civilization, they had a practice of bottomry loan. See, again guys, you don't have to remember this thing. It is just for your understanding. This is not going to come in your exam, but just for your understanding, I am just telling you here. Okay. So they have a practice of bottomry loans. What are bottomry loans? So traders paid extra to lenders so that if ships were lost, loans were waived. See, in the ancient civilization, the main mode of transportation was what? Ship. Okay, the sailor went into the ship for exploring the land, for trading everything. So the traders pay extra to the lenders. Why? Because if the ships were lost, because ship can lost because there was storms and everything, at that time loans were waived. This is what? This is a type of insurance. They are helping you, na? Similarly, in India, near Bharuch and Surat, if you can see the Gujarat coastline, they also practiced a similar type of arrangement. Got it? And similarly, the Greece, Rhodes, and the China traders, they also do this kind of practices. For example, Rhodes, losses due to throwing cargo overboard were shared among the traders. There was a very famous example called the Boston Tea Party during the American Revolution time. Okay, so whatever tea they have thrown out of the ship, right, the cost of that was shared among the traders, right? So these practices has been since the ancient times. It is not a new practice. Now let's see the modern concepts of insurance, how it started. What I've told you, whenever people fear something, they tend to come together. In India, the joint family system is there. See, if I believe many of you are also living in some type of joint family. Yes, there might be some people. Majority now the trend is shifting from joint family towards nuclear family. But even then, many of you have at least a little bit of experience how joint family work. Let's say if there is a death in any family, everything gets shared. Okay, the who is going to do the rituals, the amount, the money, every people tend to share everything. I will be giving this much money, he will be taking care of food, the younger brother will be taking care of all the arrangements. Like this, the responsibilities are shared. Okay. Now, as we are moving towards nuclear family, okay, the insurance thing comes into play. Because let's say you are living alone, you, your wife, and your kids. There is no father, no mother, no elder brother. Now, what will you do? Let's say if something happens to you, what will you do? So you take a backing of the insurance, either life insurance, health insurance, whatever. Okay. But the joint family system in India, from that, this thing has evolved in India. Okay. Similarly, global developments, Lloyd's Coffee House, London, merchant pooled risk of sea trade, and this led to the foundation of modern insurance. Please remember this name, Lloyd's Coffee House, London. Okay. And the Amicable Society of London, this was the first life insurance company. So please remember this thing, they can ask you in this thing in the exam. Okay. Chal. Now, there are few companies also. So let's remember the Oriental Life Insurance Company, first life insurer in India. Now, this was Amicable Society of London, first life insurance company globally we are talking. But from India, it was Oriental Life Insurance. Then First non-life insurer was Triton. First Indian insurance company was Bombay Mutual Assurance Society of 1870. And the oldest surviving insurance which is right now present is National Insurance Company. 1906 it was established. So these are very factual things. Please remember this. One or two questions they might ask you in the exam. Okay. So this is fact. Oldest insurance company, Lloyd's. Okay. Amicable Society. Now, first life insurer in India was Oriental. First non-life insurer was Triton. First Indian insurance company was Bombay Mutual Insurance. And oldest surviving insurance which is right now present is National Insurance. Now these are the companies. So some facts you also have to remember. Now, what are the regulatory milestones? How the insurance regulation gradually started. So first remember the Insurance Act of 1938, the first law regulating the insurance in India. Then 1956 LIC was formed. Okay, and up till 1990 only LIC was giving the life insurance. It has the monopoly. Then 1972 General Insurance Company. Okay, in 1994 after the LPG, after the liberalization, privatization and globalization happened, Malhotra Committee opened the market for the private player also. Okay, and in 1999 IRDAI Act. IRDAI is basically, see, every sector has one regulator. For example, in banking sector, who is the regulator? RBI. Similarly, for the insurance sector, it is the IRDAI, Insurance Regulatory Development Authority of India. It was established in the year 2000 through the Act IRDAI 1990. These are the some facts which you have to memorize. Now, one very important thing is FDI in insurance sector. What is FDI? Foreign direct investment. Let's say if some foreigner who is living in USA, he want to invest in some of the insurance company. Earlier, up till 2021, it was 74%. Okay. But in the year 2025 in the union budget, this limit was raised to 100%. But there is a catch. All the premiums. Okay, now what is premium? I'm going to explain it also. All the premiums must be fully invested in India, then only 100% FDI is allowed. Okay. Now you will ask, sir, what is premium? Achha, don't worry, I am going to also take one session on the key terms related with the insurance sector. Insure, insurer, insured, premiums, claims, riders, everything. Now, what is premium? For example, let's say I am a person, I go to a barber shop to get a haircut. The barber provided me a service, he cut my hair, and in return I give him a fees of, let's say, 200 rupees. This fees in the insurance sector is known as premium. What service insurance company is giving you? They are giving you a cover, life cover of, let's say, 1 crore, 2 crore, or health insurance cover, whatever. And in return for that, you will pay them some monthly or yearly fees. That fees is known as premium. Is it clear? Yes, no in the comment box, guys. Those who are watching, have you understood what premium is? Yes, for any service, whatever service you are taking, you are paying them a fees. Okay, chalo. So these are the factual slide which you have to remember. Now, as of April 2025, there are 26 life insurance company. You don't have to remember each and every name, just remember the numbers. 33 general insurance company and 2 reinsurance company. What is reinsurance? Everything we are going to cover in the upcoming session. Okay. Just remember FDI, this last point of this slide, na? Union Budget 2025, FDI cap raised to 100%, subject to premiums fully invested in India. They can ask you this question. What is the maximum limit of FDI has been approved in India? So it is 100% FDI is allowed. Okay. Now, how the insurance work? Okay. So again, I have told you, let's say in Uttarakhand recently there was a huge landslide. Okay. Many houses swept away. But let's say there was this house owner. Okay, there was this house owner. He has taken up property insurance from a company called XYZ Insurance. This XYZ Insurance has insured his property, let's say, for 5 crore rupees. And in return, this person is paying a premium of, let's say, 10,000 rupees every month. Now, his house has been swept away due to landslide, but his house is insured. Okay, so this insurance company is going to provide him the amount of 5 crore rupees. This is property insurance. And now you can keep a car here, you can keep your health here, you can keep your life in place of house. This is generally a house work. Okay, now loss of use is compensated from this pool. Now what happens, see, many asset like this person, many person, other person, they have also contributed small amount and a pool is created. Okay, he is giving 10,000 rupees. Like him, there will be many other people. So everyone will be contributing 10,000, whatever the plan they have taken. So complete pool of money will be created. And in that landslide, only let's say there were 100 houses and only 10 houses were destroyed. So these 10 houses will get the money from this pool. Okay. So please remember this thing. Got it? And in case of life or disability, let's say there is a life insurance, right? So the pooling concept will remain same, but there will be a payout. Okay, let's say if you lost your life, whatever life insurance cover you had, you will get the money. This is normally how insurance works. Is it clear how the insurance works? Yes, no in the comment box. Sir, in the course only upcoming CA classes are there, no mention today's. Yes. The classes will be updated. Okay, don't worry. All right, Yoginder, the classes will be updated. Actually, I have taken this classes on an urgent basis, right? Because many students were there and they were saying that there was no live classes. That's why I added it right now. Okay, but you will get the upcoming classes schedule from today. Okay, don't worry. Chalo. Now let's practice one question. Which among the following is the regulatory body for the insurance industry in India? Tell me. A, B, C, D. Correct answer. Okay. Pranjal is saying B. What about other students? B. Alright. Exactly. Correct answer is IRDAI. Insurance Regulatory and Development Authority of India. In which year it was established? Which year? Let's push our boundary. केवल नाम से काम नहीं होगा. We have to know something else also. In which year it was established? Pranjal is saying 1999. What about other students? I have told you. Yes, the year 2000. The act was 1999, but it was found in the year 2000. Okay? Chalo. Very good. Don't worry, at the end we'll be practicing some MCQ for this entire session. Now, how are you going to define insurance? Can we define it? Sharing of losses of a few among many who faces similar risk. So, on which principle insurance is working? It is working on the principle of risk pooling. Now, you would say, sir, what is risk pooling? Now, do you remember the example of Rahul? Rahul and his 4 friends. Rahul car was what? His asset. The car has some economic value. Okay. What was the risk? What was the risk of Rahul car? Accident or the damage? Okay. Risk is basically what? Risk is chance that car may get damaged. It is futuristic. Risk has not happened. It might happen in the future. Okay. What is peril? There is a word called peril. Peril was what? The actual damage, the actual accident of the car. Okay, the actual cause of damage. Okay, in Rahul case it was what? Accident. In that house owner case it was what? Landslide. Okay, so peril is the cause of damage. Please remember these words. These words are very important. Now, and we have seen that how Rahul and his friend, they pooled money, and from that pooled money Rahul get his car covered. Similarly, that invested and created a pool, and from that 10 house owners were given the money. Okay, is it clear? Got it? Now, can we insure anything and everything? Tell me in the comment box. Can we insure anything and everything? Shashwat is saying yes. Okay, he has said yes. The answer is correct. But do we do we actually do that particular thing? That let's say I have a pen and I have a car. What I am going to insure? Will I be going to insure my pen or car? Definitely I am going to invest my money in the car, right? Why? Because car has certain value. It is expensive. My life is expensive. My health is expensive. These are the things which matter me the most. A pen, not a big deal. I will purchase another one. Will I be insuring my notebook? No. Okay. So simple takeaway is we only insure things that have value. So what is insurance? Sharing of losses of a few among many who faces similar risk. And it works on the principle of risk pooling. They pay or contribute a small premium, a fund is created, and then from that fund, the loss is compensated. Okay, is it clear? Any doubt, anyone? Just let me know in the comment box. So is the premium always need to be paid completed even after the damage of property? No, 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 no. See, insurance is up till when your actual peril happened. Let's say you have a house, you are paying 10,000 rupees premium every month. Let's say tomorrow your house get damaged. Now you will get the money from the insurance company. Okay, and then after, let's say you have created a new house. Now it is up to you whether you want to continue this insurance or not. If you want to continue that insurance, you either you have to take a new insurance or you can continue that, start paying the premium again. Okay, so it is up to you. Got it? Chalo. See, that's why in Japan there are regular earthquake. People are insuring their houses. Okay, Assam of every year frequent flooding happen in Assam through the due to Brahmaputra river. Okay, so people there, they tend to insure their properties. Okay, chalo. So insurance is about what? It is about value, right? So I have already told you about this. Clear? So insurance is a contract between insurer and insured. Who is the insurer? Insurer is the company who is paying you the cover. And who is the insured? You. Okay, the customer is the insured. All right, chalo. Remember these terms: peril, risk, what is pooling principle. Got it? Now, insurance reduces risk burden. That is the thing here. Okay, in the case of Rahul, his friend, they pooled the money and his risk was reduced. Now, what are the different types of burden? So there are primary burden of risk and there is secondary burden of risk. First is primary burden. Primary burden of risk किसके ऊपर आएगा? Primary burden of risk, basically it is the direct measurable loss that insurance covers. It means, for example, in Rahul's case, Rahul car was burned or damaged, right? So the insurer company, let's say XYZ is the company, he will pay the money, right? For example, hospital bill for heart surgery. Who is going to pay for that heart surgery? The health insurance company. Okay, so the insurer paid the money directly. Primary burden of risk, which is directly visible. This car was broken down, his heart failed, he's in hospital, his factory got fire, right? The thing which you can directly measure, okay, directly visible, measurable loss is known as primary burden of risk. Okay, is it clear what is primary burden of risk? Which is direct measurable loss, which the insurance company covers. Yes, no? Clear? What is the primary burden of risk? Now, what is the secondary burden then? Let's say you live on a hill. Okay, you live on a hill. You know that on the hill landslide may occur. So you will be living in fear. You will be living in anxiety. Okay. And what you will do? What you will do? You will set aside as let's say some money, so that in future if your house get destroyed, you can create new one. So even see, there is no loss which has been happened. It is just in future it might happen. Okay, it is a risk, but it has not happened yet. So even when no loss has happened, people live in tension. What if my car get stolen tomorrow? What if my house get destroyed tomorrow? So let's do one thing. Let's keep 5 lakh rupees separate. Right? Is it clear? Got it? So this is secondary burden of risk. Got it? So this is the primary burden, direct measurable, right? For example, the surgery cost or the fire destroyed your factory. Secondary burden of risk, even without actual loss, you live in stress, and which cost you. It costs you fear, anxiety, mental strain. And for that, you keep certain money separate. Now, to help with this, insurance is there. Okay, for example, in India, motor insurance is compulsory. You cannot take out your car from the showroom if you don't have insurance. That's why they add the insurance cost in your vehicle cost. Got it? Yogender and other students, Dreamer, Pradipta. Clear? Chalo. Yes, Pranjal, very good. Now, principle of risk pooling. What was this principle? It is mutuality, in which we call. Okay. Now, let me give you one example. Let's say there are 100 friends. 100 friends are there, and all of these friends have 100 cars. Everyone is owning one car. Okay. And every car, one car cost is, let's say, 5 lakh rupees. Got it? Now, all these friends, everyone has a fear that their car might get stolen. Okay. So let's say if I don't, I am also a car owner and I don't have any kind of insurance. So this thing will constantly keep me worrying. Yeah, my car might get stolen. How I am going to pay that? Okay. But this is without insurance. But with insurance, what will happen? All these 100 friends, okay, they are going to pay, let's say, 10,000 rupees premium. Right? Everyone is going to pay 10,000, 10,000, and a pool will be created. So even if, let's say, 2 cars out of these 100 cars, 2 car gets stolen, so these people will be compensated for that out of this pool. So what is the principle here? The principle of mutuality. Losses of few, only 2 people have lost their money, but it has been shared by 100 people. Is it clear? So this is known as pooling or mutuality. Many people combine money into one basket, okay, and through this everyone will get helped. Is it clear? So this is your principle of risk pooling. Got it? So, acha, one more concept here is we have talked about mutuality, but there is also one thing called diversification. You must have heard of this term called don't put all your eggs in one basket. It means, it means, let's say you have 100 rupees. Out of 100 rupees, you invest 10 in bonds, 10 in equities, 10 in real estate. So you are doing what? You are spreading your funds across different things to reduce what? Let's say even because let's say if you invest all your 100 rupees in stock market and stock market get crashed, you lost every money, you lost every penny. But if you diversify it, your risk will be minimized. But here in insurance, you have to have a single pool. Got it? Chal. These things are very easy, hai na? Chal. Next is risk management techniques. So these are 5 risk management techniques. Okay. One by one, let's understand. First is risk avoidance. Avoid. Don't go into the fight, run from it. Avoid things. For example, you know that in monsoon every year there is landslide in Uttarakhand. So don't go there. We'll say that the prevention is better than cure. So try to prevent. Okay, not traveling. But everything has a pros and cons. If you don't travel, you will not experience the beauty of Himachal and Uttarakhand. But at the other side, you will be remaining safe. So this is risk avoiding. Eliminate risky activities. Don't go for skydiving. Okay. Second is risk retention or self insurance. Bearing loss yourself. For example, let's say you run a company and you keep certain funds because you know that in coming future, let's say for example, let's say USA has increased the tariff rates. So you already knew that this is going to happen. So you have kept certain funds separately so that you can cover up for this loss. Just like a bank, it knows that there will be NPA, so it keeps certain capital adequacy ratio, है ना, capital fund separately. Third is risk reduction and control, lowering frequency or severity. For example, let's say you live in a house and you know that there might be fire, so you have a fire alarm. Or let's say you go to office on the bike regular basis. So to avoid your accident, you can wear a helmet to reduce the severity. Okay. Or let's say you have some heart problem, so doctor has advised you to do yoga, so to reduce the severity. This is known as risk reduction and control. Okay, so basically steps to minimize the damage. Let's say you are living in Assam and you know that every year there is flood. So what you will do? Make your house on a height. Okay, this is known as risk reduction and control. Then there is risk financing, arranging funds to pay losses. Okay, so what you can do, you can use insurance, or you can do a kitty also. Okay, so this is known as risk financing. Self insurance will also come under the risk financing. Now the last one is insurance versus assurance. Insurance, we have known that for uncertain events like fire, theft, accident, we will be using a pool of money. What is assurance? Assurance means that let's say for certain events like death, you will be receiving a fixed payout in advance. Okay, and nowadays both things are used interchangeably. For example, there is a company called New India Assurance that don't worry, even if you lose your life, we are going to pay you the money, and this is the fixed money, right? Yes, kind of warranty, right? So these are the 5 principles of risk management. Got it? Chalo. Please remember this thing. Again, see the insurance unit is na, it is very factual, and once you understand the concept na, you're never going to forget. Okay, And you would be surprised to know that this is the most difficult unit, because there are many things. What is insurance? Why insurance? What are the risk management? What insurance actually is? So this is the conceptual thing, right? Now, who are the market players of insurance? So there, please remember these terms: 1, 2, 3, 4, and 5. First is insurer. Insurer means the companies. For example, LIC, New India Assurance, right? New India Insurance Company. So these are companies, these are known as insurers, who are going to actually give you the money. Okay, so these are the main players. They give you insurance product, they collect premium, and they pay out your claim. Okay, the second one is the regulator. Regulator is again Insurance and Regulatory Development Authority of India. Okay, so it is just like a referee or umpire. Just like in a cricket match, there is umpire or a referee. Similarly, IRDAI is the referee or the umpire. If any insurance company is doing anything bad or illegal, it is going to cancel its license. So it basically protects customers, consumers, and it says that every company should follow the rules, right? If any company create any unfair terms or means, IRDI will step into it and it will cancel it. The third is intermediaries, agents, broker, bank assurance partner, right, and point of sale. Basically, these are the middlemen. Have you heard of LIC agents, right, or brokers or insurers, right? So these are the people, right? So they sell you the insurance products, right? So these are the middlemen basically which connect the company with the customer. Okay. For example, in LIC there is one more position. Okay, I believe for the credit part or for the product part, they also hire for that. है ना? Chal. The next is surveyor or loss assessor. Now this is very important. Okay, the surveyor basically what does it do? Let's say Rahul car was met with an accident. So before that, it is not like that Rahul car get damaged and the insurance company is directly giving him the money. No, first the company will send a surveyor or an evaluator how much damage it has been done. For example, only the headlight is broken. So insurance company is not going to pay him the entire money. It is going to pay him the cost of the headlight only. Okay, so it evaluate the damage, how much repair cost it is going to cover, right? So the evaluation part is done by the surveyor. Now the third is the TPS, third party administrator. See, now those who have a health insurance, they must have known about the third party administrator. For example, let's say I'm Yash. Okay, I'm Yash sir. I have taken a health insurance of, let's say, Star Health Insurance Company. This is what? This is the insurer. I am the insured. Let's say I went to a hospital. I was hospitalized in a hospital for, let's say, 5 days. Okay, and for 5 days my fees or the hospital charges were, let's say, 1 lakh rupees. I have an insurance cover of, let's say, 10 lakh rupees. So what I will do during my discharge, okay, this hospital will have a person, the third party administrator, who will be representing Star Health Insurer. He will be sitting in the hospital in a cabin or in a room. I will approach him and I will tell him, sir, I'm a Star Health Insurance customer. This is my insurance ID. My hospital fees is this much. Please pay him. So this is the basically TPA, and this TPA will settle the bill with the hospital on my behalf. I'm not going to do anything. I'm just going to inform him that I was admitted on this time, on this day, and he will be taking care of all my bill. Okay. So this is the third party administrator, right? Generally it is in the travel insurance and the health insurance part. Okay. Chal. Now, what is the role of insurance in the society? We have seen about everything. What insurance is, how it operates, what are the risk management techniques. But what is the role of the insurance for the society? First, economic development. If your wealth is secured, If your house is secured, your business is secured, definitely it will be operating and it will be generating income. So income generation will ultimately going to benefit the society. Secondly, financial security it will provide you. It will also help in capital formation, right? The more you invest, the more it will be used for creating something. Then banking and loans also, right? For the banking sector, now see, there is a term called bank assurance. Bank assurance. What does this mean? It basically is a mixture of bank plus insurance company. Now understand one thing. Bank has a huge customer base. Insurance company has diverse product. So they come together. Bank will say, here we are only opening saving account, FD and only this thing. Let's diversify our product. Let's bring up the insurance company. Let's tie up with them. Insurance company will say, yeah, this is good. Bank has a huge customer base. It will be not difficult for us to find a customer. So this collaboration is known as bank assurance. Okay. And also entrepreneurship support, and again insurance is again an industry in itself. So again employment and everything it is going to provide, right? So this is the role of insurance for the society. And now what our government is doing, so we have a ESI Act 1948. Okay, so basically it covers sickness, maternity, that, right, everything. And government has also launched different insurance scheme, and don't worry, we are going to cover all these schemes in a separate session. So what are those schemes? Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, accidental insurance, Pradhan Mantri Fasal Bima Yojana for agricultural crop insurance, Ayushman Bharat for health insurance, Pradhan Mantri Vay Vandana Yojana, it is basically for the pensioners. Okay, they get fixed return. And then the Atal Pension Yojana, it is also a pension scheme, right? Yes, Pranjal, exactly. That is bank assurance. Okay. DICGC, a type of bank assurance. See again, it is definitely providing you a type of insurance of 5 lakh rupees cover. But I would not say, because see again, it is not a insurance company, है ना? You have to be an insurance company, right? It is a subsidiary of RBI, so we are not calling it an insurance company. Shashwat, okay? DICGC. But yes, the services they are providing is almost on the similar line. They are providing them the insurance. Okay. Now, guys, get ready for the practice questions. Ready? Which among the following act as an intermediary between the insurer and the insured? ABCD, IRDAI, surveyor, insurance agent, or TPA? ABCD, quickly. Guys, ABCD, quickly, write it down. So, again, I know many of you will get confused here. No, that surveyor is not a intermediary. It is insurance agent. Okay, he is the broker, right? So these act as intermediaries. All right. Yes, very good. C is the correct answer. Next is the primary role of a surveyor or loss assessor is what? ABCD. Guys, just write ABCD in the comment box. It would be easy for me. Surveyor do what? It assesses loss, right? How much damage? So B is the correct answer. Yes, very good. B. Assessing damage when a claim arises. Okay. Next is which of the following correctly defines the principle of pooling in insurance? Tell me. ABCD quickly. Yes. B is the correct answer. Okay. Combining contribution from many individuals. Next is which of the following is a secondary burden of risk? Primary was what? Direct, measurable. Secondary was what? I have given some example here. Goods destroyed in fire? No. It is measurable. Court liability for road accident? No. Fear and anxiety about certain loss? Yes. C is the correct answer. Very good, Pranjal. All right. Very good. Very good. Raman, Pradipta, Yogenda. Very good, guys. Next, which of the following is an example of bank assurance? LIC agent selling a term plan? Is it? No. A surveyor checks fire damage in the factory? No. SBI Bank offer SBI life insurance policy to its customer. This is known as bank assurance. Okay. So C is the correct answer. Next is a person is hospitalized and uses a health card issued by a TPA. What is the TPA's role here? Collect premium? No. Regulate hospital charges? No. Process and settle the health insurance claim. This is the main function of the TPA. Right. Yes, Aradhana. Excellent. So guys, this was the first session on introduction to insurance. Okay, and I've already told you this was the most difficult one. If this session felt easy for you, if you have understood each and everything, I'm expecting 5-star from everyone. All right, Yogender, Pradipta. Okay, सर LIC में पासिंग परसेंटेज क्राइटेरिया है क्या 45? इन दिस नोटिफिकेशन में दिया है तो बिकॉज देयर विल बी ना, आई हैव टू चेक इट. ओके, so guys, like this we are going to cover the entire insurance sessions. Okay, awareness session, because see again, the main stage insurance awareness will be highly scoring section, right? Yes, 3 p.m. will be the class timing, and again I am telling you, this is the most scoring part. Out of 30 questions you can even do 25 28 questions, right? No, it will not from tomorrow. There will be a proper session. I'll update you from Monday. I'll update all the schedule. Don't worry. हाँ, मैं बता दूंगा योगेंद्र, डोंट वरी. मैं आप लोगों को शेड्यूल वगैरह सारी चीजें प्रोवाइड करवा दूंगा. ठीक है. सो सेशन, इफ यू हैव एंजॉयड द सेशन गाइस, डोंट फॉरगेट टू गिव द रेटिंग एंड डू मेंशन योर कमेंट्स आल्सो. ठीक है, कैसे क्लासेस कैसी लगी, कमेंट्स भी जरूर लिखिएगा. आई वुड लव टू हियर इट फ्रॉम यू. ओके, चलो. PDF will be uploaded just after the class. Okay, on the Oliveboard app. You can download it from there. All right. Chalo. See you guys. Take care and Jai Hind everyone. You can find after just below the class, na completed class, there will be a PDF option. I will ask the team to update the timetable of the classes. Okay, don't worry. Take care, guys. Jai Hind. Vishwamitra and everyone, Aradhana, everyone. Take care.